Hey there, today we are talking what is the best mortgage loan type, conventional or FHA? Keep on watching. Hey there, it's Riggs here, a realtor with Coldwell Banker King Thompson, bringing you all things real estate here in Central Ohio. Today you're asking, Riggs, what is the best mortgage loan type? I get this question quite often, so I'm just going to lead with the answer right now, and it depends on your financial position. Let's break it all down. All right, let me level set here real quick so I can make sure we're on the same page. Conventional financing is typically seen as the preferred or premier financing type because you have to have at a minimum a 620 credit score to be considered or above. So in that regard, obviously you have a stronger financial position. That's why a lot of folks tend to think it is reigns supreme. Now, lenders would like for you to put 20% down as a down payment, but most will accept as little as 5%. And I do believe there are some out there, honestly, that will accept a 3% down payment, but what I typically see is a minimum of 5% down that's required. Now, let's compare FHA, which does stand for Federal Housing Administration, but an FHA loan, what I think the biggest misconception is still today is that folks who have an FHA loan or FHA financing are lower income or don't have the funds needed for a down payment. And the reality is that's not really true. In today's world, people are choosing that model for a number of reasons. But let me come back to that. FHA financing does allow borrowers to have as low as a 580 credit score to be considered. And they do require 3.5% down in comparison to what I just told you for conventional financing. Okay, so now that we are on the same page about the two loan products, here's the reality, okay? If your credit score is below a 620, then FHA is your option. Because remember, it allows you to have a score as low as a 580 to be considered. Now, I want to insert in here that your credit score is not the only thing that a lender is going to consider. They are going to be looking at your debt to income ratio as well. And at a very quick explanation, it's basically how much do you make? What are your expenses looking like? Are you overextended? I'll cover that in another video, but that's the premise of that. They're looking at that as well, so be mindful of that. They also want to see some positive balances in your accounts too, and that you're not barely making it. So there's a whole host of things they look at, so keep that in mind. But again, back to my point here, if your score is below a 620, then FHA financing is your option. If you're 620 and above, then conventional is likely going to be the best option. Now, I'm not going to say one's going to give you a better rate because it's not just based on your score. So I'd be way out of my lane to say that. You definitely want to talk to your lender who can truly assess your financial position to be able to offer you what those rates look like. But here's what I'll tell you to help inform your decision. With FHA financing, it is government backed, like I mentioned. And so the lender likes that assurance of knowing that if you default or don't pay back your loan, that the government's going to step in and help them recollect funds. But they also want you to be vested in that as well. So with FHA financing, they do require you as the one borrowing the money to pay what's called mortgage insurance. And you have to pay that for the life of your loan, which for FHA is either a 15-year fixed term or a 30-year fixed term, okay? And you also have to pay a certain amount up front at closing as well. That's just part of how that program works. Now, don't get me wrong. If you choose to go conventional and you do not put 20% down as a down payment, you also have a level of insurance that the lender would like, but they call it PMI. Or private mortgage insurance. But the kicker with that, again, that borrower is paying that every month like you're doing, but the PMI in a conventional loan is able to fall off once the loan value meets 20% of the appraised value. So they're going to have a period of time where they have to pay that, but they have the option or ability to have that removed at a certain point in time. Unlike FHA, it is on there for the life of that FHA loan. Okay, so here's the questions I would pose to you if you're trying to explore which one is best for you. First question would be, how much can you afford to put down as a down payment? I think that really is going to help be a driver for you. If you're in a space of having fairly limited cash on hand to be able to pay out in down payment, FHA is appealing because the down payment is 3.5% versus typically 5% for conventional. The other question I would ask you is, how long are you planning to live in the home? There are some people who buy homes and know they're only going to live there for 5 years. Some see it as, this is our forever home. We're going to be here for 15, 20, 30 years. I don't know what that answer is for you, but that matters because you want to consider all the cost. If you're going to be there for 5 years, going FHA and having that mortgage insurance due for those 5 years that you plan to be there maybe isn't a big deal. But if you plan to be there for 20 years while your kids are growing up and when you want them to finish like high school where you are, that could matter because that's money you can have in your pocket versus just paying out to a lender to be able to borrow the funds. So consider those things. And then my next point would be, connect with a good lender. Think of someone you already have a relationship with, that you bank with, you have your credit cards with, or your car note with. Start there. And if you don't know, feel free to reach out to folks you know who have purchased a home. You can hit me up in the comments below. I can offer some recommendations for you as well. But I think that's where it all starts. If you have a good lender, they will talk through this process with you so you can make the best decision that makes the most sense for your financial position right now. I hope this video was helpful. As always, if you have any questions, comments, concerns, hit me up in the comment section below. I am very active there and I will answer your questions and I will connect you or get you the answer that you may need if I don't have it. And then as always, I love to know if this video was helpful. So if it was, make sure you give it a like, but down in the comment section, put hashtag Rigs, I got this. Let me know that this was helpful for you so that I know these type of videos are answering the questions that you have as you're exploring purchasing a home for you or your family. Well, that's all I have for now. Thank you so much for watching. Stay fabulous and productive, and I'll see you in my next video. Take care.